won't teach you this. They will just tell you some weird stuff. So you see the 30-minute candle also didn't close with no wick at the bottom, so this creates this probability to go up even higher. You know, the 4-hour candle also started. 4-hour candle closed above that. Well, doesn't matter because the 1-hour candles are, you know, they're in an uptrend here. So we're moving here. This should continue moving up. Since this is a full margin trade, oh yeah, someone's drawing candles here. Since this is a full margin trade, we're going to probably close some positions, probably put some at break even over here. There we go. We got everything at break even. Then nothing can touch us. Nothing can touch us right now. There we go. Closed, secured positions, and nothing can touch us. This is going to continue up, and this is going to be the best Christmas for everybody because this webinar is really going to set you up for 2020. You know, for market fluidity, we've created a ecosystem where you join, you ask questions, you send charts, we analyze those charts. Every 2 weeks we have webinars, and as you can see, this candle is now going to flip bullish and it will retest the high it created that we signified before. I mean, it's just so simple. Seriously, it's just so simple. Doesn't get any better than that. And if you look at the time, this is close to London Open, and London Open has a lot of volatility. And if that is true, this candle should go all the way up. Because, London close. Getting excited over here. London close has a lot of volatility, and this should, theoretically speaking, this should just blast off. Look at the 30-minute. Yeah, this should blast off. 15-minute, blast off. Come on. We got 15 minutes left here, boys. This has got to go. If this is going to go, this has got to go. Come on. Push. Oh, man. Holy. Yeah, perfect. That was our trade for the day. Perfect. Awesome, man. Thank you for everyone who showed up. This webinar is recorded. This was recorded. This will be on YouTube till the 30th December. Till the 30th December, this will be on YouTube. So if you want to download it, whatever, you want to rewatch it, you're going to tell your friends about it, you're going to send it to other mentors, send it to all the mentors if you want, because this is going to be on the 30th December. I'm going to take it off from YouTube, right? Everyone who's in Forex family, this will be in the drive later on today. So have a great week. Merry Christmas to everybody. Happy holidays. We'll see you in 2020. Whatever that fucking date is, we start the webinar. Let's see here. January, what is it? Yeah, Monday, 13th January. We're going to restart. Take care, everyone. God bless. Okay, so welcome. Basically, the methods explained in this webinar are going to be a little bit complex. You know, so if you're new, if you just started trading, this might be a little bit confusing for you. So I would say you need to go back to the basics, learn the basics, and then watch this webinar. We're going to be going over some things that might not look apparent to you in the moment, but like, you know, once you start practicing, once you start seeing them over and over again, it will all start to make sense. So we got 4 more minutes. So we're going to take a little break here. We're going to start in like 4 minutes, just waiting for a couple more people to join in. All right, let's continue on here. So basically this webinar is titled, as you can see, Giving Your Trade a Second Chance. The reason of this webinar is because, like a lot of times what happens is that when we see a clean move, when we see a clear move, what happens is that we'll take a trade, we'll get stopped out, and after a while, price will still go in our way, right? So that's very frustrating. And I've been back testing. Well, I'm not been back. I've been live testing this. I've been testing how to take, the second entries or how to give your trade a second chance. So now, you have to be very careful when you're giving your trade a second chance. You have to be mindful of the fact that you need to keep risk managed, because if you don't keep risk managed, and if you're using your full risk on the first attempt, and the second attempt is going to be added risk, then it's not going to work. It's going to be very, very risky. So this webinar is for you if you see a perfect trade but get stopped out all the time, don't know where to enter, where to put stop losses. I know we've been through this second point a lot of times, so I think it's going to be a good refresher to go over this again. Trade runs in your favor after getting stopped out. So we're going to see how we can enter second positions, trading based on fear rather than logic. What this basically means is that when you take a trade, and it's a logical trade, it makes sense, you take a trade, it stops you out, and then when the new opportunity comes, you're not confident enough to take that trade. Why? Because now you're trading based on fear. Now you're trading based on the fact that, okay, you got stopped out the previous time, so now this time you might get stopped out again. But in reality, the new trade is completely independent of the last trade, right? So let's move forward here. Let's see what we got. So first of all, we need to identify what are the best times to trade. Most people, what they do is they want to come back, they want to come in the afternoon sessions, or they want to come in around, like, when there's not enough volume. So you need to identify what are the best times to trade. The number one best time to trade is when there's volume in the market, right? So you have to ask yourself, when is there volume in the market? When markets open or when markets close? That's when you have a lot of volume in the market. So if you think about it, the only time we should be trading is when, let's say you're coming to the market when there's pre-New York. When you have pre-New York, there's a lot of volume in the market, so that means you could catch some moves. That means the candles are going to be big enough for you to catch a trade. So let's say pre-New York, New York open, and then you have London close. Actually, let's go to the next slide right over here. Okay, perfect. So when we're over here, these are the premium times to trade. Let me get the red one here. So you can screenshot this, take a picture, whatever you want to do. These are the key times to trade. So let's say you're waking up at pre-London, right? Pre-London, there's going to be some sort of volume between 1:30 and 3 a.m. Eastern Standard Time. This is the key time to trade when there's going to be volume in the market. What most people do is, now when you come to the markets, you're told three things, right? The first thing you're told is that, hey, you know what, man? This market, it's opened 24 hours a day, 5 days a week. So you can trade at any time you want, Second thing you're told is it's a $5.2 trillion market. So that means you can get as much money from it possible. The third thing is that the market is there to serve you. That's wrong. You are there to serve the market, right? So you need to identify what times are going to suit you best, right? Let's say you have a job, right? You have a job and you come home and the only time you have left to trade is this time. Or maybe, like, you come home at like 5 p.m. or 6 p.m. So you only have this time to trade. Be Asian and Asian. So when you're coming to the charts that, let's say, after Asian Open, or let's say at around 11 p.m. Eastern, when there's no volume, what you're going to notice is you're going to notice that the candles are going to be smaller. There's not going to be enough volume in the candles. Like, the candles aren't going to print what they're supposed to print, because sometimes what happens is that guys will say, okay, you know what, I'm trying to trade wick fills, and I'm looking at the market at 3 p.m. Eastern. This is afternoon New York time. When all markets are closing, there's no volume, and price prints something that you like, and you try to take a trade, but it doesn't work out. The reason why it doesn't work out is because there's not enough volume in the market. You need volume in the market to move price, right? This is why it's very important. Before we even talk about taking positions, you have to identify what time is going to suit you best to trade. right? Some people, like, there are a lot of guys in my Slack group, they trade pre-London till London Open, because they have identified that, okay, these are the times when there's volume in the market. Me personally, I trade between these times, between 6:30 a.m. Eastern to like 9:30 a.m. Eastern, because I know during this time, there's a lot of volume in the market. And this is the only time I'm trying to trade. What most people do is they'll say, oh, you know what, I'm going to trade the London session, and then I'm going to trade the New York session, and then I'm going to trade the Asian session. That makes no sense. And the reason why it makes no sense is because when people come to trading, you come to trading to have independence of time. And when you're focusing on these all these different sessions, man, you don't have independence of time. Then you just slave to the markets, because that's what I used to do. I used to come to the charts in the morning. So I would trade the New York, and then I would try to trade the Asian. Asian would be 50-50 because there's less volume there. Then I would wake up at night to trade the London session. That would always be lost. So this was a very, very toxic environment I was in terms of trading. So I had to make a change. You need to make a change. You need to choose one session. Contrary to popular belief, the more sessions you look at, or the more time you spend on the charts, the better you're going to get. No, that's false. I hear guys say you need to put hours in the charts. You need to put time in the chart. You need to grind on the charts. All that is good. You need to grind on the charts, but you need to be logical about that. It's not like you're going to be on the charts all the time, or you're going to be on the charts while you're at the dentist or at the grocery store. That doesn't work, because you need your own personal time too. So when you're looking to take entries, you're looking to see what time of the day is going to suit you best to trade. That's very, very important, because the longer you can spend that amount of time on the chart, so like let's say if I lived in Europe, right? So I lived in Europe, and the best time for me to trade would be this time here. Early mornings in Europe, which is going to be London Open and Euro Open. So this is going to be the best time for me to trade, because I know that, okay, if I can spend enough time watching this session, I can eventually get good at it. Then I can eventually look around and say, like, hey, like, you know what, I know